Hi all, welcome to my YouTube channel Banking Regulation Simplified. In this channel, you will understand the latest trends of banking regulation, understand in-depth concepts of banking regulation, and also you can use this YouTube channel to catapult your career in the world of banking regulations. Good luck. Hi all, in today's video, we shall see about the apex body behind the world of banking regulations, which is known as BIS or the Bank for International Settlements. This bank is the apex body, think tank, and the coordinator behind the thinking and launch of regulations, and this has been an active service over the last 40-50 years, and its regulations are known as the Basel framework. We are in the fourth installment of Basel framework, Basel 1, 2, 3, 4. So all these were the brainchild of this organization known as BIS, Banking for International Settlements. So this video helps you understand the machinery and the organization bulwark behind the world of banking regulations, and how it is coordinated and implemented through dialogues with various nations and central banks and regulators. Now let's get into this video. So this is the history of BIS. It was founded in 1930. It's the world's oldest international financial institution, much older than the IMF and the World Bank. It's also called as the central bank for central banks, meaning it serves exclusively only for central banks. It does not indulge in any profit or any commercial activities. So it strictly deals only with central banks and does not deal with commercial banks. Let's be clear on that point. And its current membership is 63 central banks, which is representing about 95% of global GDP. In fact, the membership of BIS increased by leaps and bounds, especially after the 2007 and 8 crisis. This is something for us to know about the history of BIS. Now let's move further. Historical background: 1930s. It was established after the defeat of Germany in World War I through a legislation known as Young Agreement, which ensured Germany repays for the losses it created for World War I, because everybody held Germany liable for World War I. But at the same time, Germany's economy was in doldrums. So it had to be lent money to rebuild its economy, and once its economy is flourishing, it has to repay its debt. So this whole scheme of things about lending and getting the money back paid by Germany was done through this organization known as BIS. Okay, that is the history of BIS. But during the course of these activities, there was a general perception that BIS was slightly skewed toward German interests and was not acting in neutral manner. So there are both truths and falses to that aspect, but let's not get into that. So around 1944, there was something known as Bretton Woods, which was created. That was a meeting, or that's also known as a Bretton Woods Agreement. Out of this were born World Bank and IMF, International Monetary Fund. So at that time, world nations were not in favor of BIS to continue, but they wanted IMF and World Bank to take over. But however, BIS did survive this scare and this strenuous period. And in 1950s, it helped manage the something known as European Payments Union. So after World War II, all the European nations were in dire straits due to the longevity and the lethality of that World War II. So what happened is they had to rebuild their economy, but by then US was the topmost nation and topmost economy in the world, not the European nations, and they had to rely a lot on America or USA for both its imports and exports, but they didn't have enough dollar reserves to fund those imports and exports. So that is where European Payment Union came in, wherein it took money from US under the Marshall Plan and lent it back to the major economies and to the smaller economies of Europe in a proportionate manner, help them rebuild their economy, and whatever was their need for import and export, which required dollars, it netted off all those transactions, came up with a sum equivalent, and it was funded partly by dollars and gold. So this was coordinated by the BIS. So in many ways, European Payment Union is the precursor of the European Union, which we see today. 1970s Herstatt Bank. This was a German bank which dissolved by taking aggressive forex exchange swaps around the time when US moved away from the Bretton Woods Agreement. Meaning, at that point of time, under the Bretton Woods Agreement, all the currencies in the world were either pegged to to the gold or to a basket of five currencies. And US being the dominant currency or the dominant economy was widely used and widely accepted. So that led to a kind of a payment of crisis problem for USA, where they had to keep a lot of gold and were having lesser and lesser of dollar for their own use. So this was posing both an operational risk and also a handicap for US. So what they did is they moved away from this Bretton Woods and said from today onwards it will be a free floating exchange rates, which is what's relevant till today. And US President Richard Nixon announced that. So after that, fundamentally it was a wrong move by US. So everybody viewed US dollar to weaken, but on the contrary, due to its wide acceptance and wide prevalence, it continued to grow in value. Few banks like Herstatt Bank, what they did is they expected the US dollar to weaken and took foreign exchange swaps or foreign exchange positions in favor of the US dollar to weaken. But on the contrary, when it strengthened, they accumulated huge losses, and Herstatt Bank, in fact, accumulated losses to the tune of $500 million, which eventually led to its bankruptcy. And on one fine day, the German regulator pulled the plug or declared that the Herstatt Bank is bankrupt. By then, for the previous day, there were foreign exchange swaps between either sides of the Atlantic for currency combinations of German Doge and US dollar. So people who had paid in German Doge had not got their US dollar. By then, before the transaction could happen, the banking license of Herstatt Bank was revoked. This was a huge shock and sent ripple waves and shock waves across the global economy, and there was mutual suspicion on such banks dealing with the foreign exchange transactions and cross-border payments, and also exposed a big hole in the banking system, which was a byproduct of globalization, wherein cross-border transactions and foreign exchange transactions is inevitable, but was operating without proper safeguards. This was the major event which led to the creation of the Basel framework, which we shall see in later slides. The next is 1988. So, wherein we saw the Basel Accords being created, starting with the Basel I. Then today, BIS is focused on financial stability. The world is brittle. The world economy is brittle and sophisticated due to the advantage of technologies and the huge risk-taking appetite of banks. So that has both its merits and demerits. From a demerits perspective, how to handle it and mitigate it and ensure things are going smoothly from a longevity and a prosperity perspective are all the concerns and the focus of BIS. Then innovations, central bank digital currencies, which is being done as a pilot in many economies, including India, which is a central bank equivalent of the digital currencies like GPay we see today. Cyber risks, so it's a connected world. There are both good and bad elements. Good elements work for the prosperity, bad elements work for their own prosperity, which in turn pulls down the whole scheme of things. And climate finance, climate risk is a real threat. How it can be incorporated and how banks can act responsibly from an aspect of climate risk is something which is being promulgated as a regulation by BIS. Now let's move on. So like the organization structure of BIS, like I said, BIS is a unique institution. It's owned by central banks, not governments or private shareholders. Its structure ensures both central bank cooperation and independence from political influence. This is an important point to note, meaning, like I said, it does not indulge in for-profit activities or any transactions with commercial banks, but caters exclusively to the needs and requirements of central banks, which is a totally different ballgame, not similar to the transactional banking services which we see. And aside to that, it's owned by the member central banks. In the earlier slide, we saw there are about 63 central banks. So the ownership of BIS is split across these 63 central banks. And however, BIS generates profit out of its services for central banks, which is distributed back to its shareholders. Let's move on. So, like I said, it's owned by 63 central banks, 95% of global GDP. So the shares of the BIS are held by member central banks. Earlier, there was some private listment, but that was also cancelled. So now it's solely owned by its member central banks. So its headquarters in Basel, Switzerland. The representative office for Asia Pacific is Hong Kong. Representative office for America is Mexico. And innovation hub centers in major banking hubs like Hong Kong are there in major banking hubs like Hong Kong, Singapore, London, Stockholm, Toronto, Frankfurt, and other hubs. So in other words, it is situated in Basel, Switzerland, considering its neutrality, but has presence in the major banking centers and also presence in the major continents like Asia, Pacific, and America. Let's move on. So this is the governance structure. It has a central general meeting of members, which is equivalent to the shareholder meeting in a company held annually in Basel. It comprises of representatives, usually governors of all member central banks. In other words, the heads of all the central banks from the member nations. And it approves the annual report and financial statements, decides on profit distribution amongst its member central banks, and also elects members of the board of directors. So this annual report, I shall attach a video towards the end, wherein you will understand the balance sheet and the annual report of BIS. I mean the financial statements and the annual report of BIS. This annual report of BIS is widely followed among the banking fraternity. Board of Directors, the key governing body of BIS is primarily the earlier members or the earlier backers of BIS, which includes Belgium, France, Germany, Italy, UK, and US. And in turn, these board of directors elect up to 9 additional directors from other member central banks. So the board usually has 18 to 20 directors. So what they do is they oversee the management of BIS, because BIS has the responsibility of catering to central banks, implement, coming up with regulations, understand the economic dynamics, understand the dynamics of financial markets, come up with suitable regulations, publish those regulations, and publish certain niche reports as well. So all this means that that's the scheme of things or the day-to-day activity of BIS. All this is overseen by this management of BIS, then gives strategic direction and policies, because the requirements of each central bank and each economy is different. So it can't be a one fit all approach when it comes to implementation of regulations. But at the same time, in a connected world, stability of banks and the economy is more important than anything else. So from those aspects, these board of directors give the strategic direction and policies. Then it approves the banking services and financial operations, banking services for central banks and the financial operations for on behalf of central banks. So management. So this is second rung below the board of directors. It's led by the general manager, who is like the CEO of BIS. The general manager is appointed by the board of directors for a 5-year renewable term. He is supported by the deputy general manager and the head of departments. These are major departments under the BIS: banking, monetary and economic, legal, HR, IT. Each of them have head of departments who roll up to the general manager. We shall in the coming slides we shall see the organization structure of BIS. Moving on. So these are the responsibilities of the governance structures: the day-to-day operations, which will mean banking operations, research, publications, and publications of reports and regulations, execution of board policies, the decisions taken by the board of directors of BIS, which comprises the various representation from the various central banks, then represent BIS international forums, wherein explain the publications, explain the regulations, and also help share understanding and guide the various members and the fraternity of the global economy for issues pertaining to economics and financial markets. So these are the various subcommittees under BIS. So these are the nerve center and or in other words, the spine of BIS. So let's look into them. Basel Committee on Banking Supervision, BIS, which sets the Basel Accords. This is the think tank and the brain cell behind all the banking regulations we have seen so far in the last so many years. This is also known as BCBS. So the Basel Accords, it's in the fourth edition, 1, 2, 3, and 4. So all this is the brainchild of BCBS. Committee on Global Financial System, CGFS. It monitors financial markets, especially interruptions and interferences by central banks whenever they go for huge sell-off or huge purchase, or whenever there's a change in interest rates by certain banks, or whenever there is a major crisis, how the markets are behaving, and the dynamics and synergies between markets and central bank interventions. Committee on Payments and Market Infrastructure, CPMI. It's the brainchild behind all the payment infrastructure, regulation, and guidelines we see today. SWIFT, NEFT, RTGS, payment wallets, central bank digital currencies are all the brainchild of CPMI. So it's working closely with many central banks on the deployment of their own digital currencies, which will soon replace or be a competitor to the wallet services offered by private players. Markets Committee, it discusses central bank market operations. Like I said, central banks also have certain responsibilities and pressures from the financial market, like they need to ensure that currency is correctly valued, neither too devalued or highly undervalued or overvalued. At the same time, they need to maintain foreign exchange reserves, adequate foreign exchange reserves to fund for import and export. Apart from that, they also need to maintain balance of payments. So all these things are guided by the markets committee, who acts more of a consultant for the central banks. Then the financial stability board. So the Basel Accords, which are the brainchild of BIS and BCBS, though are on paper not an obligation for central banks or members to follow. That implementation is done through Financial Stability Board, which works closely with central banks, head of states, and G7 and G10 committees for implementation of regulation, and in a times of crisis acts as the arm and muscle for ensuring stability is returned and things come back to normal. Though it's a subcommittee under BIS, it has its own powers and uses BIS primarily for its infrastructure and its intelligence. Let's move on. So this is the organization structure of BIS. The member central banks, general meeting of members, board of directors. This happens annually. Board of directors, there are about 6-7 permanent members. Then they elect some 9-10, which comes to about 18-20. General manager or executive head, like the CEO. And the deputy GM and various department heads are rolling up under the general manager. Then the various committees, BCBS, CPMI, CGFS, markets, and FSB work under the general manager. And BIS offices and innovation hubs, Basel headquarters, Hong Kong, Mexico City, global hubs are all the operations, the day-to-day operations are all overseen by the general manager, and they also closely work with the various department heads and the various committees. This is the organizational structure of BIS. Let's move on. So the banking services core function, safe custodian of reserves. In other words, the reserves of central banks for gold, foreign exchange are kept by the central banks. Those central banks can keep it on maintain by themselves, but just in case they want a safe custodian and a reliable third party, BIS is the first option. And provides liquidity management for central banks, especially during scenarios like the 2007-8 crisis and the COVID crisis, where things came to grinding halt and there was panic all over. Liquidity was a big concern and was a scarce resource. So in such scenarios, BIS will use its liquidity reserves to help fund the day-to-day operations and meet the needs of central banks. Apart from that, it facilitates cross-border settlements among central banks, just in case if there is a payment need to be done among central banks, which will normally be the requirements of purchases and selling between governments, and which will be done through the synergy of central banks and BIS. Ensures trust and stability among central banks, because banking regulation is a tricky world. You need somebody who has the intelligence and the character and the integrity to look upon them for guidance and for direction. So that role is being filled by BIS. Policy coordination and cooperation. So it hosts meetings of central bank governors and regulators, which is called Basel meeting, which is an annual event. Then provides a neutral forum for monetary and financial stability discussions. The discussions which happen in all these forums are kept very confidential and are highly frank discussions. Committees hosted at BCBS, at BIS, we already saw BCBS for Basel, CPMI for safe payments, CGFS for monitor global financial markets. The standard setting of BIS under the BCBS committee towards banking regulations is Basel 1 1988, Basel 1 Accord, Basel 2 2004, Basel 3 2010, Basel 4 2017. So we are in the transition period from Basel 3 to Basel 4 for the global banking community. Apart from that, it sets guidelines for payments, clearing, and settlement systems. So research and publications, the BIS annual report, quarterly report are highly followed by the banking fraternity and provide direction and guidelines. Apart from that, there are research papers for monetary policy and inflation, global capital flows and financial cycles, risks in bank and shadow banking, financial technology and digital assets, Especially the first two are actively followed and consumed by the central bank fraternity for decision making and also ensuring growth and prosperity for their own nations. Apart from that, the risks in banking and shadow banking, financial technology, digital assets cater to a much wider audience, which would include commercial banks and also the consulting frameworks, consulting firms. So this is the core functions of BIS from innovation and future readiness. It focuses on deployment of central bank digital currencies, cross-border instant payment systems, cyber security frameworks to ensure the safety of individual wealth and a sovereign wealth. Climate-related financial risks bring about a sense of responsibility for climate-related risks from a lending perspective. Let's move on. So this is a crisis response. In 2007-8 crisis, it coordinated the central bank liquidity swaps, especially under the FSB arm. Wherever there was a need for a certain tranche of currency or a certain amount of money, that was duly done or probably immediately done by FSB, and acts as a trusted intermediary in global emergencies. So trust is a very important point or aspect from a tricky world of banking business and banking regulations. That gap and that role is filled by BIS. Global stability, it develops frameworks we have seen in the previous slides. So monitors cross-border exposures. And thought leadership, it influences monetary and financial stability debates through its reports, through its meetings, through its representation in various international forums, and its regulations and its publications. So its clients are primarily central banks who would want to decide on national policies to ensure stability and prosperity for their own countries. So that is done by BIS both from a country specific and a global panoramic view as well. An innovation driver, it pushes central bank to explore digital currencies and fintech. That's the future, and a lot of research and guidelines have been laid by BIS, and that mostly in the pilot phase or in the incubation phase for adoption by central banks. So we have come to the end of this slide. This is a sneak peek about me. So just in case if the slides were not clear, I shall attach a video of the slides towards the end of the video. I hope you like this video. For more such videos, like, share and subscribe. Thank you.